Hello everyone, and welcome to Alternative Design's presentation of Triple Play, 3 reports to increase your sales. I'm Tim Harding, Chief Marketing Officer at Alternative Design, and I'd like to welcome you today. Thank you for taking the time to join us. I hope that you'll find the information I provide today to be valuable to you in helping to build your practice and, as the title says, increase your sales. As always, you can type questions at any time into the chat box on your control panel. I will respond to all of the questions at the end of the presentation. I'll also note that I'm going to be talking about 3 different reports available to you today in this webinar, and those are located also on your control panel under the Materials section. And so if you would like to acquire those reports, you can certainly download them right directly from your control panel at any time during the presentation. So those are available, and you'll have them available immediately. So with that, we'll proceed. From time to time, I like to get a little more academic than I usually am, so fasten your seatbelt because I'm going to get a little more academic today and talk about some technical stuff, but some technical stuff that I think you're going to find very, very valuable in your daily practice. I'm going to do it for 3 reasons. Number 1, hopefully to increase your knowledge a little bit, which is always beneficial when you're sitting across the table from a client or prospect, but also because having a third-party endorsement in the form of another written report is very powerful as well, because it can be used to enhance and back up and validate things that you've been telling the client verbally. And that's really the third reason that I like to present these reports and make them available to you, is because it gives you the ability not only to talk about a concept with a client, but gives you something that you can show them visually. And we all know as salespeople that people, prospects and clients, process information differently. Some of them respond very well to verbal explanation. Others need to see pictures and graphs and see it in black and white. So I think the reports I'm going to talk about today will provide you with some additional tools to help you increase revenues to your practice. All of these reports I've referred to from time to time, taken little pieces of them and tossed them into other webinars. So you may see some familiar information here, but I don't think that I've ever gone through the entire report and talked about the report in its entirety and how you might be able to use that when sitting down and talking to a client or a prospect. The first one I want to talk about, I refer to frequently because it's got one particularly compelling finding in it, but it's put out, it's an annual survey put out by an asset manager in the United States, BlackRock. And basically what they do with this annual survey of investors is they really want to know, for their benefit and for the benefit of other financial advisors, what are investors thinking? What's on their mind? What's driving them? What's motivating them? And what's holding them back? What's keeping them from making sound financial decisions? Now, it's an international report, but what we have here, it's an international survey, but what they've done in this report is condense that larger survey down to just focus on the findings here in the United States for U.S. investors. And they surveyed 4,000 investors and 500 financial professionals through the summer and fall of last year, 2013, asking investors what was on their minds. And what came out from this survey of 4,000 investors were 5 major concerns. Number 1, they were concerned and lacking confidence in their financial future. Things don't look good going down the road. Second, they're reluctant to invest, and I've talked about this numerous times, that people are holding on to cash. And you'll see in just a minute, one of the charts here points out how much of the investable dollars in the United States are actually sitting on the sidelines. Third is that they have a knowledge gap around income-generating opportunities. And folks, we're in the insurance world. And annuities, although we've used them as a great accumulation vehicle over the last several years, their primary purpose is to generate income. And we're seeing more and more sales driven by those income riders rather than the accumulation side of the fixed indexed annuity. And so you're going to find some interesting information inside this report on what investors do and don't know about how to generate income. They're concerned about a squeeze on their household incomes. Of course, we've had a difficult economy, and we've known this for a long time. There are widespread fears about meeting their retirement goals. So a lot of things on investors' minds. The first one is their financial outlook. The report says that investors are split down the middle as to whether they're optimistic or pessimistic about the future of the economy. 50-50. So you've got half of the investors in this survey who are quite concerned over the future of their financial situation. The big one that jumped out at me, and the one that I've talked about numerous times, is that the BlackRock survey determined that 48% of the investable dollars in the United States are sitting in cash right now, earning, as you know, historically low rates. Much of it in money market accounts or in short-term CDs that are paying substantially less than 1%. And what's interesting as well is that 50% of the investors surveyed expected to remain in that holding pattern in cash with no major shifts for the next 12 months, for the next year. So a lot of money sitting on the sidelines, which means, as I've said many times before, great opportunities for us in this particular moment in time. They were asked, in this report, what would it take to get you to take action? What would it take to get you to move some of those investable dollars that are sitting on the sidelines back into play? And not surprisingly, guarantees were the very first thing on the investors' wish list. 36% of them would move money if they had guaranteed returns. Well, folks, that's what we have. Virtually every market-linked CD on our platform today has a minimum guaranteed return. So that risk is eliminated. That desire on the part of investors in the United States is taken care of by that minimum guarantee. Less personal debt. But then the third thing, 29% of the investors said that just knowing I won't lose my initial investment would motivate me to move money back into play. And, I don't need to preach to you about the power of guarantees and the guarantee of principal that our safe money products have. This is what investors are looking for right now, and this report simply reinforces that. I found this one particularly interesting, especially since, we all come from the insurance sector of the world. There's a significant, what the report calls, knowledge gap around income-generating opportunities. Interesting numbers here. 58% of the investor survey said that earning an income on their investments is important. And yet, only 23% of them actually do draw an income from their investments. 43% say that income-generating investments are much riskier than they were 5 years ago, and yet only 27% are knowledgeable about what their options are. So we've got a great opportunity here to educate a section of the population that wants to be earning income on their investment dollars but doesn't know how to do it. Huge opportunity for us. Okay. How do investors think about income-generating investments? Well, they think that investing for income will be more important as they get older. 53% of the participants in the survey said that. I don't like taking too much risk in the portion of my investment portfolio focusing on generating income. 45% of those surveyed indicated that. 34% said they start thinking more seriously about income when interest rates go up. In other words, they're throwing up their hands and going, it's hopeless right now. The rates are so low you can't get income. Well, we know that that's not true, but that's what 34% believe. It's not possible to generate strong investment income in today's market. 31% of those surveyed felt that. Only 29% felt that what's worked in the past will work in the future when it comes to income generation. And only 27%, think about that, only 27%, 73% of the people are not confident that their investment income is keeping up with the rate of inflation. 27% are confident. That means 73% of the investors surveyed aren't confident that they're even keeping up with inflation, even at the moderate rates that we've seen in recent years. And over the next 1 to 2 years, I anticipate that my returns from government and corporate bonds will be the same as they have been. Only 27% believe that. In other words, they believe that rates are going to go lower. So, what does the survey say an investor should do in light of all of these interesting findings? Well, first of all, the report suggests that you rethink the cost of cash. And of course, we know, and I've quoted Warren Buffett before, Warren Buffett thinks that cash is probably the worst investment you can possibly have. So those people who are sitting on the sidelines, it's time to think about putting that cash back to work. Second, seek income in different places. This was really interesting to me because one of the things that it suggests is consider multi-asset funds which do the hard work for you by looking across asset classes, geographies, and sectors for the best opportunities worldwide. Boy, that sure sounds a whole lot like a Goldman Sachs Market Link CD that I've talked about numerous times in the past couple of months, and I'm going to talk about again because it does address many of the issues that are raised in not only this report, but also one from S&P. Seek growth in unpredictable markets. And last but not least, expand your indexing. In other words, don't rely on stock selection or mutual fund selection. Rely on being invested broadly across the market. And of course, I've talked quite a bit in the past about how the next generation of indexing is really coming from the banking industry and from the products that we're featuring on our platform made available to you. I've talked over and over about the power of dynamic indexing as opposed to passive indexing, and this BlackRock survey is suggesting to investors that they do exactly that, expand their exposure to indexing. This, ladies and gentlemen, is the happiest turkey in the whole world. This turkey knows exactly what his day is going to be like. He knows he's going to have full range of the farm, that he could be able to go just about anywhere he wants without any interference. He knows that he's going to have as much to eat as he could possibly want. He knows this because every day of his life up to this point, he has received all the food he wanted. Every morning he gets up and he's happy because he knows everything is going to be just wonderful. Every day is just like the day before, except only better until the last day. And the point we're trying to make here is that past performance is not an indicator of future performance. And yet, we find that this is one of the primary evaluations that investors make before they choose to put their money to work. They look at past performance, and what happens by looking at past performance is they end up being the turkey. And I've preached this for years and years and years, as you probably have too. It doesn't make any sense to chase returns, because you never catch them. You're always coming in and buying high and selling low. I saw an article just last week on how it's time to get out of the market because the average investor is now getting in. And they're getting in because they watched last year's performance. They've watched this bull market go, and now they can't wait to get in. But they're going on past performance, not evaluation of future potential. Well, we can preach this all we want, but now there's actually a report available to you in the materials section of your control panel, which will validate this with numbers directly for your clients. I found the report from this article in Investment News. It says the top mutual funds are highly unlikely to maintain their success. The top mutual funds are highly unlikely to maintain their success. The report in the materials section of your control panel is from S&P Dow Jones Indices, and it's entitled, Does Past Performance Matter? The Persistence Scorecard. And what they mean by persistence is, of the top mutual funds in the United States, the top performing mutual funds in the United States, how many of them were able to maintain that status at the top or near the top of mutual fund performance? And they looked at it several different ways. This first chart here, by the way, there's a great deal of written material inside this report, which I'm not putting up on the screen. I'm just going to put up the graphs and the charts so you can take a look at the bottom line numbers. But there is a very good verbiage inside this particular report. So what we're looking at here is the performance persistence over 3 consecutive 12-month periods, or 3 years. And what we've got here is a mutual fund category broken down by categories. The top quartile, the top 25% of mutual fund performers is the top quartile. And the fund count at the start of this survey, it was in March 2012, there were 687 mutual funds in the top 25%, or the top quartile of mutual fund performance in the United States. But look at this. These numbers are absolutely incredible. By 1 year later, March of 2013, less than 19% of those mutual funds were still in the top quartile. That means 80% of the top mutual funds in March of 2012 are no longer in the top 25%. 1 year later, they've fallen. And what's really eye-catching is if you go out 2 years, less than 4% of the top 25% of mutual funds in terms of performance in March of 2012 are still in that highest quartile. Oh, it's even scarier than that. If you go down halfway down the chart, you get to the top half as opposed to the top quartile. So the top 50% of all mutual funds. There were 1,372 mutual funds in that top half of mutual fund performance in March of 2012. 1 year later, over half of them had fallen not out of the top quartile, out of the top half. And 2 years later, less than 20% of them remain in the top 20% of mutual fund performance. Folks, there's a reason why they're required to say past performance doesn't guarantee future returns. It's because it's true. It's true, and this report demonstrates that rather dramatically. You know, it gets even more dramatic if you go out to 5 years. And this chart is the same calculations, but based on 5 years instead of 3. So starting in March of 2010, there were 715 mutual funds in the top quarter, top 25%. 5 years later, March of 2014, 0.28%. Less than 0.5% of mutual funds that were in the top quartile managed to stay there. That is really telling, because you don't invest in mutual funds for the short term. You invest over long term. And if you based your decision based on past performance, you were likely going to be very disappointed in the vast majority of cases. Of course, there are always 1 or 2 exceptions, but the vast majority of mutual funds that were in the top quartile in March of 2010 weren't there, well, even 1 year later, but certainly 5 years later, not there at all. And you can see the chart breaks this down by type of mutual fund. If you want to delve into it that much. But I just thought having these numbers available to you, where you've got an actual survey that says what we've been preaching is really true, these numbers validate, you know, what you've been telling people about past performance, not predicting future performance. And so you've got an opportunity here to put in black and white in numbers in front of your clients and prospects that reality. And of course, what does the S&P survey suggest that you do? Index, index, index. The point they're trying to make here is that active money managers very, very seldom outperform the benchmark indices. It's a great argument for indexed products like FIAs and market-linked certificates of deposit. Speaking of investors chasing returns, I've shown this chart before as well. This runs from 1991 to 2010. It doesn't really matter where you grab the numbers from. The results are always the same. You see the S&P 500 on the far left grew 9.1%, or average return of 9.1%. The average equity fund investor, you see right there in the middle, 3.8%. And it's due largely because of exactly what we're talking about, chasing returns instead of putting together a sound plan. I mentioned earlier we've got the perfect market-linked CD to address all of these concerns. It is, of course, the Goldman Sachs Momentum Builder. Pays a minimum guaranteed interest rate of 1%, just like the BlackRock survey suggested. Investors are looking for guarantees. And, of course, it is a multi-asset vehicle. I've talked about it several times. It goes across 7 different, completely different asset classes. It's all done mathematically. Don't worry about a money manager. And the returns, as I've pointed out previously, are pretty significant when you consider everything that the market in general has been through since 2003 through 2014. I won't belabor these points, only to say that based on what the BlackRock survey and the S&P analysis is telling us, this product would seem to be a perfect fit to address those investor concerns. The last report I want to talk about, I talked about briefly last week, and then I had a number of questions about it post the webinar, so I thought I would go ahead and chat about it a little bit more. For those of you who haven't heard of it, it's called the Entree Marketing System. It comes from a third-party vendor, so there is a nominal charge for the system. But those people who are using it out in the field have found it to be a very, very powerful door opener and a very powerful point of sale piece. It's basically a 25-page report entitled The Enlightened Saver's Guide to Higher CD Returns. It meets the need of today's modern consumer to have information before they sit down and make financial decisions as well as other buying decisions. It's completely customizable to you. There's plenty of room in there for you to put your own stamp all over the report as the provider of the report. It covers all aspects of CDs. It talks about all the different types of CDs that are available, the ones the banks never tell the average consumer about, like market-linked CDs, but also step-rate CDs, callable CDs, zero-coupon CDs, and the like. So it talks about all the types of CDs available, and market-linked CDs get very, very favorable treatment in the report. It talks about understanding risk, understanding the risk of losing purchasing power by sitting on the sidelines, as well as the risk of losing principal. It talks about different strategies for increasing returns on CDs, strategies like laddering and barbelling. Talks about qualified money in CDs, how to maximize FDIC insurance coverage, and then importantly for us, it talks about non-FDIC insured alternatives. So it gives very favorable billing to fixed indexed annuities, fixed annuities, and also single premium whole life. So some opportunities there for some cross-selling. And all through the report, it urges the reader to meet with the financial professional who provided them with the report, because you're going to tell them things and help them make decisions that their bank on the corner just isn't going to. The system's designed and is pretty effective at getting in front of centers of influence, community leaders, associations and organizations like homeowners associations, nonprofits, charities, churches, and the like. helps you get in front of high net worth individuals, and helps you capture some hard to reach assets. A lot of different ways to use the report. I know a lot of agents just keep copies in their waiting area so their clients can peruse through it while they're waiting for the actual appointment to take place. It stimulates some conversations in areas that the agent wasn't necessarily expecting and turns up assets and money that the agent didn't know was there. It's a good leave behind piece once an interview is over, once an appointment is finished. You can leave it. I know some people are leaving it in senior centers. Other trusted advisors like CPAs and attorneys, it's good information for them to have. And of course, it's a good way to get into restricted markets like structured settlements and so forth. And of course, all of these opportunities give you the opportunity to cross-sale. One thing that's being added that wasn't there before is they have asked me to create a consumer video for the Entree marketing system, and that should be done this week. The condition is that number one, it's exclusive to Alternative Design appointed agents, and that there's no additional charge in the system for this video. So there will now be a consumer video. You can send the link out to your client base. Simply tells them a little bit about the strategies and the opportunities to get a higher return on CDs, and offers the report to them. And so it's a great way to use it as a pre-approach piece. And then once again, never want to forget that the opportunities there for cross-selling are immense. If you have questions about the Entree system, pricing and how to use it and what materials are included and so forth, I'm more than happy to spend the time talking to you. We're big believers of this as a way to open doors here at Alternative Design. You can reach me on my direct line at 858-240-2059, or of course you can always email me tim.harding, Harding, at adisusa.net, and I'll be happy to discuss the various applications of the Entree marketing system with you. Normally sells for $250. I can get it for half price if you order it through me, so $125. Unlimited usage. Comes in digital form, and you can print as many copies as you like, and you can send it in emails as well. So nice little tool to have your hands on. Okay, July cutoff date. Everything is cut off on Thursday, July the 24th. So if you've got cases you're working on, now's the time to start wrapping them up. We're getting closer and closer to closing day. All offerings for the month of July close on Thursday, the 24th. So, mark that date down on your calendar, and if there's anything we here at Alternative Design can do to help you close the case, please let us know. We're, of course, more than happy to help. With that, I'll take a few moments here and see if we have any questions on any of the reports or any other topic for that matter, any of the current offerings. I'll be happy to address anything there. Scott asks, is the Entree marketing system just the report? Are there other materials? Scott, there are other materials, and I'll be happy to go through those with you if you want to just give me a phone call, and I'll tell you what's there and how to utilize it. Let's see. Danny says the documents aren't on the toolbox. I think, Danny, you must be referring to the material section. I'm showing them as loaded here. So if something is not working right for you, send me an email or give me a call, and we'll make sure that you have access to the reports if something's going on in your control panel. I am showing that they're loaded up here, so I think we're okay. Joe says he got here late. Shame on you, Joe. You were late. The reports are available right now, as long as the webinar is live, on the in the materials section of your control panel. You can download those right now as we speak, and you'll have them instantly, including a sample of the Entree report. You don't get the whole report, like I said. That's from a third-party vendor. And there is a charge for that, but I did put a sample in there. Charles said, I misunderstood you. You said the reports are $125. No, Charles, you did misunderstand. The BlackRock report and the S&P report, both of those are free. They're available in the control panel. You can download those and have them right now. The Entree marketing system does have a cost associated with it. I can get it for $125 if you order it through me. What is in the control panel here is just a sample of the interior writing, just fragments of what's in the report. So you can just kind of take a look and get some flavor for what the report does with your clients and prospects. Okay, that looks like all the questions. Once again, thank you so much for taking your valuable time to join me today. I hope you found it worthwhile. I hope you get those reports downloaded, and I hope you use them because I found them to be fairly effective when used in the proper ways. So thanks once again for joining. We'll see you next week, same time, same place, Wednesday, 11:35 Pacific time, day before closing. Have a great week.